from the ringside at Yankee Stadium where the New York...
Joe tried to the left and right, the head both punches, just as Jack drops inside. When he marches across the ring, he lands a terrific left reverse to his body against the hook and takes a terrific right and a knockdown. Josh is now 2-3.
Good morning, everybody. Welcome to the opening range. My name is Jim Cagnina with NinjaTrader. Appreciate everybody coming today. Whole flurry of activity early this morning. So we have a lot of work to do today. Before we go too far, let me remind everybody, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that could be an equation for opportunity, also an equation for risk. Only fund your futures trading account with risk capital. My personal definition, money I could afford to lose doesn't change my lifestyle, lengthen my retirement horizon, or overly stress me out. We make bad decisions when we're under stress, especially when we are trading. Easy on the day trade margins. You get plenty of leverage as it is trading futures. So just be careful. Maxing out on those day trade margins, generally not a good idea. Trading on a real-time simulated live NinjaTrader trading platform today. None of this should be construed as trade or investment advice. Past performance not indicative of future results. Any comments, questions, ideas, observations, throw them into the chat. Remember, the chat now lives on the website at ninjatrader.com/events. Feel free to participate. We strongly encourage it, embrace it, and really appreciate it, actually, because your comments, observations, trade ideas are awesome most of the time. So let's do it. First to chime in, Bill 61. Bill, thank you so much for being here. Greatly appreciate it. We're just going to start out with an E-mini S&P daily chart right now, and then we'll talk about a slew of a flurry of global activity that we're seeing right now come across the screen, come across the wire, and affecting these markets. Right now, we're in a little bit of a bull mode here, right? I guess you'd call it a bull rally in a bear market. We're trading around that 50% retracement number that we've identified a while ago from the fib high right here, CPI, September 13th, to the low, October 13th. And then we retrace nicely up to 50%. We're kind of sitting there, right above that 50-period EMA, right in my rectangle here. Remember, my rectangle is considered an area of resistance. Now, maybe it will become an area of support. I don't think we're quite there yet, but I got my eyes on it. I'm watching it. The bottom right here, I guess, I don't know if the bottom's in or not. Nobody knows if the bottom's in, no matter what they say. Don't listen to them. It might be, it might not be. Double bottom, though, in the E-mini S&P, 35.84. Give or take a couple of points here and there. I also have options expirations. This is new to the chart. I just kind of marking third Fridays of every month for options expiration, especially after listening to Brent Kachuba earlier this week on Traders Workshop. It was eye-opening for me. Hopefully, maybe for you too. In any event, GDP is here today. We have, let's actually, you know what? Let's go ahead. Let's take this opportunity to talk about the domestic and international economic releases that we just had, right? So GDP came out, gross domestic product by the BEA, and this is a quarterly GDP, right? This is the first estimate for Q3, right? Q3 end of September, and the report is accumulated and produced now. And they even have an asterisk there saying, hey, it's not based on complete data, which frustrates me because we're going to have a revision and another revision. But GDP came in actual. This is headline, Q over Q, 2.6%. Forecast was 2.4%. So a little bit higher. Previous was minus 0.6%. So this was a hit, right? This beat expectations. Now, if you compare it to the Atlanta Fed's GDP now estimate, that was 3.1. So it didn't beat Atlanta GDP estimate, but it did beat the consensus estimate as well. And by the way, that app is called Economy now. So if you want to download it on your phone, it's pretty cool. Actually, it's got other statistics in it as well. And it's forward looking, which is a little bit different than a lot of the stuff that the Fed does. So in any event, there was a Q over Q PEC component to that number too, and that Q over Q PEC number actually was 1.4%. Forecast was 0.8%. Previous was 2.0%. So again, that was a beat. Now, keep in mind, tomorrow is the month over month number for PCE, which is going to be way more important. So we're going to also keep an eye on that. We'll talk about more of that at the end of the show. So this PCA within the GDP is, Q over Q based on an annual rate. We get the real deal tomorrow, so we'll be on our heels there. So again, it didn't really move the needle that much in the markets, this particular print, and maybe because it was so close to expectation. Moving on here to durable goods orders. Well, by the way, one thing, and Isabella, if you could cut and paste that GDP, a link to the report. I thought the report was interesting. It's worth a read for sure. One of the sentences in there stuck out really kind of stuck out at me. It said, within imports, I'm going to read it right now. I have it in my notes. Within imports, a decrease in imports of goods, notably consumer goods, was partly offset by an increase in imports of services, mainly travel. So we're talking about that import factor, which is heavily affected by the US dollar. So that story might be a little bit different in the next GDP number for Q4. So that was kind of an important sentence, I thought. And then in the actual report for the Bureau of Economic Analysis report, it does talk about disposable personal income, personal savings, and current dollar personal income. So those were kind of all positive, except for personal savings was down a little bit. So that was also interesting. The report has a little bit of detail in there that I think it's worth noting. Let's kind of shoot over to durable goods orders. It was a miss, right? Actual was 0.4%. Forecast was 0.6%. Previous was minus 0.2%. And a couple highlights there. New orders for manufactured durable goods in September, up 6 of the last 7 months. Shipments of manufactured durable goods in September, up 16 of the last 17 months. And then transportation equipment, up 11 in the last 12 months. So even though the durable goods orders was a tad bit of a miss, all those other things seem to be kind of positive. Just thinking a little bit out loud right now. Jobless claims finally was pretty close to target. 217. This is the weekly jobless claims number by the U.S. Department of Labor. 217,000. Forecast was 220,000. Previous was 214,000. And the 4-week moving average ticked up a little bit to 219,000. So again, sideways pre-pandemic numbers, and no signs of things slowing down on the jobless. Seasonally adjusted insured unemployment was 1.438 million, an increase of 55,000. So insured unemployment did peak up a little bit to 55,000. The rest of the day, EIA natural gas report by the EIA, Energy Information Administration, is at 10:30 today. So be keenly aware of that. Kansas City Fed manufacturing at 11, probably not going to move the needle that much. And finally, finally for now, the Fed balance sheet is at 4:30 p.m. So let's go back and take a look at some of these other stock index futures to see how they're, what our bias is, how they're behaving right now. Again, S&P seems like it's in a little bit of a bull run here. So as a result of that, my bias is slightly bullish right now. And let's take a pop over to the NASDAQ. NASDAQ, not so much. NASDAQ is taking it on the chin a little bit. It can't get any traction over my trend line that I drew. We're below the 38.2%. We're below a significant, well, now I'm going to have to adjust this rectangle. I know I promised in Bar's closing I would have this all done before we started today. My bad. Anyway, moved it back up a little bit to that 50% retracement. That's now the new area of resistance on the top part. So again, I'm a little less optimistic on the NASDAQ. I'm open-minded today, but if I had to lean anywhere, I'd lean a little bit bearish. Not the case for the Russell 2000. The Russell 2000 is moving. They like to move it. We like to move it. You like to move it. And the Russell is doing it. We're right at that 61.8% small cap. We talked a lot about this yesterday. Again, I'm looking for places to buy the Russell 2000 unless something really caustic or negative hits the wires right here. Dow Jones, positive. We got buyers coming in again. This is just like the Russell and the Dow. Now they're moving it. Now we have a lot of earnings and stuff to talk about as well, which is going to affect each of these stock index futures a little bit differently. And I'll just mention a few of them that we already had today. We have Anheuser-Busch, I believe is a beverage company. Up EPS was a beat, right? 81 cents versus 78. Caterpillar, that's kind of, that's a big one, right? That's heavy equipment we're talking about. 3.95 was actual versus $3.19 estimate. That was a beat, which is, it was good. Honeywell International, another one, 2.25 versus 2.16, beat the estimates. McDonald's, everybody's favorite, even though they had to close all their stores in Russia, they still, on an EPS basis, 2.68 actual versus 2.57 estimate. American Company 1.8 versus actual versus 1.67. And Southwest Airlines, if you could figure out their cost structure there and trying to get a discounted ticket, you're a better person than I am. It's kind of difficult figuring all that out on Southwest. But anyway, 50-cent EPS versus a 41. So again, travel is happening. People are traveling. I mean, that's for sure. People are traveling. And that's one, when you look at the GDP number, you'll notice also, the travel component internationally from an import or an export point of view, import-export point of view is positive. People must be going overseas. Tonight, Amazon, 4 o'clock, big deal. Apple, 4:30, big deal. Intel, 4 o'clock, big deal. United States Steel, 4:15. So after hours is going to be also exciting. Join us for Bar's Closing. If you're not doing anything, it's going to be interesting as well. So that's kind of the earnings situation. Everything's looking positive, which could explain some of these stock index futures being so positive and some being so negative. All right, having said all of that, again, thank you for being here, everybody. Let's take a really quick 30-second break, and I'll be right back.
You deserve full market transparency. You deserve the flexibility to trade on your own schedule. You deserve access to professional futures trading tools. NinjaTrader, because you deserve more. Start trading futures at NinjaTrader.com. Capture the excitement and opportunity of crypto trading in a secure and highly regulated marketplace. Meet cryptocurrency futures. Go long, go short, you decide. Start trading futures at NinjaTrader.com.
All right, let's continue on our journey on daily charts. Gold right now is right again. Jim was supposed to work on this rectangle, and this rectangle is really kind of not even good, but I'm going to move it up a little bit. Area resistance, when you have to keep moving up area resistances every day, it kind of doesn't become an area resistance anymore. It's like the trend is kind of on the upside. And right now, again, all focus is on the US dollar versus all the other currencies and interest rates as well. As we look at gold, trying to see if we can get a lift up here in gold. Certainly the ECB's action this morning probably didn't help, right? So we had Lagarde is probably still answering questions at the press conference, but they raised their key interest rates as expected, 75 basis points, but they did nothing about QT, right? They didn't, quantitative tightening didn't really, as a matter of fact, they did the opposite. So they're going to keep reinvesting securities that have matured. So their QE program is not being tapered, right? QE is not a thing yet over there, and Lagarde's being grilled by it. By the way, she's a formidable person for sure, and I'm a big fan. But in any event, that's affected the Euro FX, which let's just leap over to it right now. Right now, I'm open-minded on gold, probably a little bit bullish, but I'm open-minded. Let's go over to the Euro right now. The Euro, big sell-off based on the ECB, even though the expectations on rate were right on point, all the other stuff wasn't. So we're right at that 50% retracement. We almost touched parity again, looking like we're getting an equal and opposite candle. I did have a pre-trade idea that I'll share with you guys in a little while. But right now, I'm not interested in buying the Euro FX until the dust settles a little bit. Because if this is an equal and opposite turnaround, if this is a turnaround kind of formation, which it possibly could be, we could see some further downside in the Euro FX versus the US dollar. Did we talk about crude yet? We did not talk about crude yet. Inventory number came up. We had a big bump after that number came up yesterday in crude. Continuation buying coming in again. I think we're in bull mode here as well. As a matter of fact, the retracement is so significant, I would probably change my fib line a little bit at this point to kind of see where the possibility lies. And again, it's, you go high to low, do you go low to high? If you go low to high, the retracements are almost completed, right? The retracement's almost completed. So I'd take a bigger term approach here. And this is the next peak up. I would probably go high to low and just use those fib numbers as just general guidelines, as opposed to just outright retracement numbers. And that's what it would look like. Again, we're closing above that 61.8%. Then I'm going to go to a higher peak as I adjust those fib lines later on as we go forward here. Treasury bonds, we're retracing back up finally in Treasury bonds. That 23.6% definitely in play right now. We hit a low of 117 handle, big deal. This is starting to tweak up a little bit. We'll see if that continues. We have a big, really nice wick on the contemporary candle from today. Let me just show you that a little bit. Buyers came in, boom, pushed us back up to here. So again, looking for places to buy, I think at this point, U.S. Treasury bonds. And we'll take a look at the yield curve here in more details. We are open. We've been open for a while. Let's get to those 10-minute charts. ASAP, who is with me here today? Wow, what a day. I did have one martini last night. I'm trying to stay away from it on the weekdays, right? Stay away from it on the weekdays, but it was Mrs. Cagg's birthday. So we had one and we celebrated her birthday. So, but I feel good anyway. I feel really good anyway. Woke up this morning and looking forward to working out again today. Important. Health is important. Keeps you focused. Who's with me today? Raleigh is with us. Wally, Richard II, Richard II, M. Bartlett, Pops, Mom and Dad Keggs. Good to see you this morning as usual. Len Harvey, Paul M, Tim Marco, Crossbow is with us. JJ Binks, Turtle. Good to see you, Turtle. Miguel, Eddie C, Brian K, Charles. Griffin is with us today. Good morning, Griffin. Bernadette and Ankle Boo Boo. Griffin had two nice little 5-point scalps, and I'm told we are lottery winners. I don't know what I'm going to do with that extra $4. So congratulations on that. If I missed your name, I apologize. Again, I greatly appreciate you participating in the chat, helping each other out. That's what is making this a community, right? It's not just me and Tom just talking to a screen. It's us interacting together in a way that we couldn't do 15, 20 years ago, right? We couldn't do this 15, 20. Now we can, right? It's free. It's, data is flowing quickly. It is a miracle as far as I'm concerned. Ankle Boob was talking about stagflation. I think Ankle Boob thinks so. How would markets work in that environment? That's a good question. I don't know. I mean, my guess is GDP for Q4, GDP for Q1 next year might be a little less rosy. A lot of this stuff is delayed, right? Fed raises interest rates. It doesn't have an immediate effect. It affects it kind of slowly. I don't know. And I'm kind of mimicking what the experts are saying, the supposed experts, but I'm kind of agreeing with that point of view. Thank you, Ankle Boo Boo, for that. Appreciate that. I will let Mrs. Keggs know that you wished her a happy birthday. Seriously, I greatly appreciate that. Right now, opening range is kind of moving. We're not even 5 minutes into it, right? And this is a struggle, right? We have a struggle between earnings looking good, positive GDP, more rate hikes on the horizon. And on that note, I think it's important that we take a look at this, the Fed funds tool watch right now. We'll do it early today because, again, I want to wait for that opening range to kind of happen before we kind of come up with the trade idea. But in any event, right now, remember, we're at 3%, right? 3% is the bottom of our target. Let's go to the probabilities window here. Still 91.2% that we're going 75 basis points. I think that's going to be the answer. But we're starting to get a little love here for a 50% hike. Highly unlikely, especially now after this GDP number and all the data associated with it. My guess is we're 75 coming into next week. Remember, it's the quiet period, so thank goodness we're not going to hear from these. They should have it. It should really be 3 weeks of quiet period. Who's with me on that? You guys just stop talking for 3 weeks. You could talk 1 week, the week after the meeting. Now we're at a 65% chance. This is a significant move that we're only going 50 basis points in December. My eyeballs are on this, not necessarily on these numbers later on in 2023 because they're going to change, right? They're going to change. They're going to be dynamic. But 65.4%, this is a new thing. Remember, yesterday we're at 52%. So that has moved, and that should put some positive inflection into this stock index futures market is we're waiting for this first 10-minute candle to expire. So yeah, so far it's up a little bit. Point of control shift, really nice point of control actually right now at 38.57. Yesterday's point of control, 38.44. But the previous day's point of control, as I recall, is higher, right? The previous day's point of control is the same as today's point of control, which I thought was interesting phenomenon, because that makes yesterday more of an anticipatory day as opposed to anything else in my mind. I could be wrong. That's just how I'm thinking about it. But in any event, we got a little bit of price happiness here in the E-mini S&P. Let's go over to the NASDAQ. Again, this is the weak link in the puzzle, if you remember. Let me move that out of my way. Point of control a little bit lower. I think it's kind of a weird distribution. We have a little bit of a volume spike at the top. And right now we're trading right at the point of control, right above yesterday's low. That's that red line right here. Again, two areas of interest pretty close. We have the VWAP above it. VWAP is held as resistance for this market ever since, I don't know, ever since 2:30 this morning, 2:30 to 2:40 candle. We had this break down below. Now, this was a significant break, and this may have been a good signal. I mean, I wasn't up at 2 o'clock, 2:30. Maybe you were, but confirmation candle in play, looks good. And then, a longer term short position would have been in the works. So this was actually a good signal when we broke through that VWAP here. And look at the CCI in the bottom. If you just follow my crosshairs all the way down, that was on the move downward as well. That was a nice downward sloping CCI at that point. I could make it a little bit bigger so we could all see what I'm talking about. And there it is right there. So again, we have some confirmation, secondary confirmation on the delayed indicator, which is my oscillator, which is the CCI. In any event, let's keep moving on to the other stock index futures while we're waiting for this opening range to kind of develop right now. This is looking like sellers are coming in again in the NASDAQ. Not the case here in the Russell. Russell seems to have a pretty, wow, look at that. Where does it end? Jim, get your configuration going here. R1 is in play. So we're going to wait. This is a lot of volatility. This is an extremely large candle relative to all the other candles in the Russell for this first 10 minutes, right? And this might be, if you think about it, when you're picking individual stocks or stock options or ETFs, you're playing ETF market or trading futures, this could be difficult, right? Because we got some positive news, although it's a gloomy forecast, although there's also some hope on the horizon. So it's kind of like, all right, where are we going with this, right? Are bargain hunters still getting involved or not? And my guess is the answer is yes, but I don't know. Dow Jones. Looking strong, up 4. Wow, this is the strongest stock. This is the winner chicken dinner of stock index futures right here, right now, as we're approaching R2. R1, we blew through R1 substantively, right? Substantively. We tried to trade around it a little bit, but opening range said, nope, we've had enough of that. Buyers are coming in pretty forcefully right now in this first 10-minute candle. And again, R2 is not too far away. I'm not interested in going short this particular market until the dust settles a little bit. And then I might not be interested in doing it either. Oh my goodness. Crude oil again, rallying on the open, up 30 cents on the day. Kind of nice kind of point of control, mimicked yesterday's point of control, excuse me, in crude right now. But, right early pre-market, shadow open, boom, buyers came back in pretty darn strong here in crude oil. Again, until there's a top, not interested in going short. Let's wait and let this thing kind of give us an opportunity to put a Fibonacci retracement on there, to draw some rectangles and all that stuff. We're getting close on crude, but we're not there just yet. Nigel says, what does the CCI show us? Well, it's an oscillator. It's like any other oscillator. There's nothing special about it. I'm just, can't teach an old dog new tricks, basically, Nigel over here. But it oscillates around a zero line, right? And it's a momentum indicator. And some people would suggest it could tell you when the market's overbought. The CCI is high, over 100. Or if it's oversold, CCI is low, minus 100. I don't necessarily subscribe to that part of it, but I do like to see the slopes, right? How quickly does it change from overly heated state, right, over 200, and kind of breaking down back down to zero line or breaking down below 100. That kind of velocity gives us a little bit of an idea on direction, but mostly on momentum. So that's what that is. And again, it just oscillates around a zero line. There's other oscillators you might be familiar with, right? RSI, MACD, Bill Williams, awesome oscillator. I love saying that. And that's what that is. But again, stick with the oscillator you're good at, the one you like, the one that you're familiar with, because they're pretty similar, right? They're pretty similar, but different. Okay, gold right now, again, I think gold is reacting to this mixed news here that we're seeing with currencies. Look at the currency pairs on the right-hand side of the screen, and we have a mix, right? We have some strong, some weak. Yen is actually strong. Excuse me again. Canadian dollar is actually strong. Remember, we had that surprise from Canada yesterday with that 50 basis point move. Peso's a little bit strong. New Zealand dollar strong. Alternatively, pound, Aussie dollar, euro, and Swiss franc are weaker versus the US dollar. So a little bit of a mixed bag there, but that mixed bag, that strength against the euro and the strength against the pound may be pushing this gold down a little bit. Right now, a really nice point of control. My preference would be looking for places to go short right now. That whole VWAP has held pretty darn good. A purple dot, volume weighted average price. We've been trading below it ever since 4:20 in the morning. And, we tried to go through it, couldn't, tried to go through it, couldn't, tried to go through it, couldn't. So so again, and it's holding right now, tight opening range right here, if you correlate the opening ranges. So again, looking for places to go short here in crude and a couple of areas of interest, which are pretty nice. But before I even do that, let's just throw a fib line in. This is ready for a fib line. Overall, I think I'm going to go high to low on this Fibonacci line. I'm going to reflect the whole entire session. I'm just going to paint it on there and see what we see. 50%, really neat, right at the top of the opening range, right above that VWAP. Again, there's my entry. I'm going to split the difference here, and I'm going to go ahead and try to get short a couple of units here. In the micro, this is the micro gold contract. Stop loss point of view, well, we have a 61.8%. Another VWAP band, which we haven't seen for a long period of time. So I'm going to be right just north of that 61.8. I'm going to respect that little wick right here, 830 wick or shadow, depending on which textbook you read. And I'm going to put it my stop right there. So we'll be patient and see if we get some kind of drive back up to the VWAP, see if we can get short, and then target some of these, icicle wicks down here at the bottom that we saw from 820 all the way to 9 to 910 candle. So that was a lot of market uncertainty there with those big wicks. But I think the trend is down here, looking for places to sell gold. Time is it? All right, we're in that second candle. We're going to go over the main event, the stock index futures, in a second. And we're going to pick one of them and try to focus on a trade idea on one of them. Bonds, again, are trying to again, I'm looking for places to buy U.S. Treasury bonds. Point of control is pretty far away right now, so it's a little bit problematic. We have confirmation on this positive cross here on the VWAP. That was pretty strong confirmation up. I am going to draw a fib line right now, and I'm going to come up with a similar trade idea here. I'm going to go ahead and put my retracements in. I'm going to go low to high. Remember, I feel like we should get closer to that daily 23% retracement, which was 124 handle, if you remember that. Right here, retracing back nicely to the 38.2. Again, that would be an aggressive entry for bonds because bonds do actually trend. And we have 3 red candles. We have 2 lower lows. We have two lower highs. So I'm going to respect that. I would really, really be patient here and wait for a drive back down to 50 before we pull the trigger and try to get long in Treasury bonds. But I think it might make some sense. We'll revisit this in a little while. 6E, early morning trade idea I still have up here. And, the announcement came in and I waited for a confirmation candle. So, I gave up these 2 red candles for a confirmation. And then we started to pull back up. Let me see if I can make this a little bit more clear for everybody. My target was S1 for sure. And so I waited for this red candle to clear the low wick to make a new low, so I did get filled on a short trade right here, and you can see the price I had my markers on 1.00450. And then again, I was a little bit above the S1, pretty confident we're going to get to the S1, which we did. And that's where we picked it up. But again, I gave a little bit away by waiting an extra candle, but you have to do it. You have to let the market assimilate these really radical, not radical, but important market releases or changes in policy. And that's what we did right there. So it worked out okay. It wasn't bad. Anyway, remember, past performance not indicative of future results. Speaking of currencies, Carlos is getting busy. Thank you for this, Carlos. Carlos shorted this week a USD Canadian dollar targeting 132. Remember, now Carlos is talking about an over-the-counter Forex trade. In futures, it's the opposite, right? It's Canadian dollar versus the US. So you would just go, just invert it, right? So you just be 1 divided by 1.32, and that'll give you the number. But dollar index back to 106.8. Yep, it's breaking down. Area to short the US dollar again, 111 to 112.50, 111.45 to 112.50. Short bias US dollar. Thanks for that, Carlos. I also have a little bit of a short bias on the US dollar right now, even though interest rates are out of whack. Still, I mean, as an example, I took some notes this morning, right? US, where are we at, right? We're driving toward a 3.75 Fed funds target next week. Bank of Canada is already at 3.75. Bank of England's at 2.25, right? So a lot less. And the ECB is at 2.0. So we're still winning the interest rate game, right? Money likes higher returns. Money likes higher yield. So there's that gravitation toward the higher yield currencies. Anyway, but overall, I think I'm with you on that, Carlos, as well. Chris says, I really like your market analyzer. Any chance I can get it? Yeah. What do you mean? For sure you can get it. Just all you need to do is get the NinjaTrader platform, load it up on your machine, open up the new, add the market analyzer somewhere on here, boom, right there, and you got it. And it's easy to customize, really easy to customize. Remember, right click, stuff happens. Right click, stuff happens. I'll go at the very end. Chris, I'll show you how I customize mine. Let's wait till the end though. Let's go back to our main event here, E-mini S&P. Well, very interesting, folks. Big wick on the previously completed candle. Big wick on the previously candle. VWAP right now, we're trying to drive south of VWAP. And a lot of folks use that volume weighted average price as a indicator to suggest the momentum has changed in a different direction, right? Cross under suggesting we're going to start selling off, cross over suggesting we're going to start rallying. So right now it looks like, again, we're trying to sell off, which the green candle is showing us, right? We're pushing down to 38.44. We're almost unchanged on the day already. So in my world, I want to wait for a confirmation candle just to see, because a lot of times you get immediately an equal and opposite as well. And Turtle makes a really good observation. On another note, by the way, Canadian dollar goes along with WTI crude, and I think there's a strong correlation between the two as well. Turtle, thank you for pointing that out. And I even think Jimmy Iorio and Bobby Iacchino are fans of that idea. So thanks for that. So again, sellers are coming in pretty strong right here. Another minute and 23 seconds left for this next candle. Same phenomenon happening right here. This is looking extraordinary, much weaker, right? Nasdaq's looking much weaker in this environment right now. Let's go ahead and get a fib line here. I know we're hitting the bottom, right? We're hitting the bottom. Probably going to make new lows right here. Let's see where our daily pivot. I don't have daily pivots on this. Come on, Jim. Wow, that's a rookie mistake. All right, someone asked about pivots. I'm going to show you. We're going to go to indicators. Why don't I have it on here? Huh. I'll be surprised. I don't know. We're going to add it, though. Something is fishy here. I'm going to go to pivots. I think it's just pivots. There we go. Pivots. Double click. Add it. It brings it down from available to configured. Now on the right-hand side, I can configure it if I want. I'm going to leave it. I'm going to leave it alone. I'm just going to hit apply and OK. Not going to change any of it. And there it is out of the box. S1, boom. We just cruised through S1 like it didn't even exist. we're kind of moving. Again, this is looking bearish as well in the NASDAQ, big time bearish. Everything's starting to turn around. Russell equal and opposite on the way down. Again, this would be also a good opportunity, possibly to look for an area to get short, right? Or alternatively, you might say, listen, no, if we don't retrace past that 61.8%, I want to be a buyer, right? I want to be a buyer. And that's a thing. That's a good thing, actually. 61.8% directional change in my mind. I got my eyes on this Russell here. I think it's, we got the pivot down here. We got the VWAP is bounced up pretty high right now to that 50% retracement. And we have a final candle here in that last period of time. So strategy here, again, I want to wait to see if we can get to that pivot as just a temporary measure and try to get a turnaround back up to the upside in the Russell. That's one trade idea. Before I do that, though, I just do want to look at the YM, the Dow Jones, because that was the other market that was up a considerable amount. And it is earnings week. So that's a factor. Again, I'm going to go low to high and see what this looks like here. R1 is not helping, but the VWAP is helping, right? The VWAP is helping. And it's below the 61%. So I like this setup. I want to see a penetration below the VWAP from a wick point of view and then a turnaround. And we saw this happen yesterday a couple of times. So we're going to go ahead and get in there long. And again, this is a little bit of the art part, right? When you have a volume profile that's a little kind of messy and you have a couple of areas of interest, the bottom of the opening range, VWAP, 50% retracement, and then the 61 down here, that's what you have to go on, right? That's what you have to go on. So, depending on how aggressive or conservative you want to be, and I'm in the middle right here, I think. I want to see a penetration. This might be may or may not be too aggressive or conservative. I don't know. But let's see if we can pick one off. If we keep moving below that 61.8%, then I think all bets are off. So from a stop loss point of view, this is going to be my main trigger of where I want to consider putting a stop loss. And we kind of went through it quickly. Now you understand, and then there's this other area of support over here. Let me draw the rectangle really quickly so that you can see what I'm thinking instead of do what I'm thinking. And so again, that's that area right here. So this is pretty far stop away, folks. So if this isn't for you, make sure you get involved with the micros, because those are great contracts as well. That'd be a sell stop. Now I got to get a target up here as well. So let's take a look at our target opportunities. There's 50%, there's 38%, there's 23%. Those are areas of interest to me. I want to use this volume profile though as well. That 23% has a nice shelf to it. I like that. I'm going to be a little bit below that 23.6%. And so again, this trade might take a while. It might not take a while. But I'm going to be I want to tweak this down a little. Let's see, there's the shelf. There's the 23. I want to be a tad bit below the 23. That's my target right there. So we'll hold tight on that and see how that thing goes. That's, I think, our best hope here on a stock index future trade idea. Whew, what a day. What a day. What a day. 9:53 already. I want to remind, while we're waiting, right? We still have that opening range that's being developed, by the way. While we're waiting, remember, a lot of leverage, a lot of volatility, a lot of opportunity, a lot of risk, easy on the day trade margins, risk capital only, real-time simulated live NinjaTrader trading platform today. None of this should be construed as trade or investment advice. And again, and the chat's living now on the website. That's the main service message from Jim Cagnina to you guys today. Starting next week on Thursday, Anthony Credelli is back with Tom Schneider on Thursdays on a weekly basis. Really looking forward to amping that show up. That's going to be a lot of fun, as Anthony is always not only entertaining, but very knowledgeable and very skillful, in my humble opinion. So that's going to be happening coming up pretty soon. Did I mention trade on a real-time simulated live platform? I'll mention it again. In any event, let's wait until the 10 o'clock candle, and then we'll shoot over to some daily charts. Let's shoot over to some more calendar of events. We'll talk about life, the universe, and everything. The answer is 42. And if you're old enough to know that, you know where that comes from. Turtle says, take a deep breath. It's funny, Turtle. Thanks for that comment. That's what my mom's main criticism is I talk too fast, right? She likes coming to the shows, but her main criticism is I talk too fast. And, you know, when your brain's working quickly, you want to keep up with that. And it's not easy. It's not easy, but it's harder to go slow and be deliberate in my mind, right? It just is. And I know it's probably counterintuitive for most folks to think that, but it really is. And it's kind of that, you know, that trader mentality, yeah, I was on the floor of the board of trade 100 years ago. And it's that excitement, that speed, that drive, that nonstop astonishment, that nonstop disappointment, enthusiasm, that kind of gets in you, right? It's kind of soaks in you as well. And this is exciting to me. It really is. It's exciting to do. So I'll try to be a little bit slower. And I know I make a lot of verbal mistakes every once in a while that I have to correct myself when I'm that quick. But thanks for that, Turtle. Appreciate that. Oh, boy. A lot of mix on the board here. We got green, we got red, crude oil up 73 cents, gold down $8.4. That's kind of that. Let's go over to that gold chart. That's a little bit surprising. Yeah, we didn't get our target. Unfortunately, we were directionally correct. Really nice volume profile, though. I want to keep an eye on this. This point of control is dominant, 2,055 contracts. This is the micro gold contract, right? And just a really dominant candle here, the previously closed candle. Continuation. This trade idea, unfortunately, we're going to have to scrap it, right? It didn't happen. We didn't get it in the time frame in which I wanted it to happen. So we're going to go ahead and get out. And I don't think we're going to get back up there by 10 o'clock, right? That's 4 minutes. So this target wick is in play. Is S1 in play? I don't know if S1 is in play. This could be a range-bound day for sure. And the opposite, once we get a little bit of support down here, I love the bottom of the value area to try to get long and try to bounce back up a little bit to get to that point of control. Chris is funny. I agree. No worries. I watch most of your videos at 1.5 speed. I love it. I love it. So that bottom, that point of control is happening right now, right here, right now. Let me just go ahead and draw my rectangle here. Kind of show you what I'm thinking. Now, the tough part about going long right now is we have this dangling wick down here, right? We have this dangling wick down here. So I would wait for another penetration into the rectangle. And I'm going to go, this is a micro, right? So we're going to go 2 units on the micro. Let's wait for some penetration into the rectangle. Stop's going to be at the low. That's the only place you could put it. Well, that's not true. You could put it a lot of other places, but this in my mind is reasonable, right? Is it reasonable to suggest we're gonna hold? Is the bottom gonna hold? And I'm gonna say, given the kind of the slow, not a big trend day for anything in particular, we have that point of control that's really neat. It's really, really powerful. I kind of like this trade setup. The more I talk myself into it, so we're gonna keep it. We're gonna keep it right there and see how it goes. Let's go back over to the Dow and see if there's anything different we have to do as we approach that 10 o'clock. That 10 o'clock number. So interesting, very interesting. I'll tell you why I think it's interesting. I'm going to draw a rectangle again. Again, this is just a visual. These rectangles just help me visualize on the chart. I'm not a dome trader, depth of market, a dome trader. NinjaTrader is a great super dome. A lot of people love it, and I'm not going to hold it against you if that's your gig for you. But for me, I'm visual. I want to see. That's why I put these. I use geometry. Just the rectangles to say, hey, this is an area of support so far. We haven't had a candle close in there yet, right? This is a 10-minute chart. We'll see if it closes in my rectangle or if it doesn't close in my rectangle, and then it gives us a really better ability to do. At the end of the day, to say, hey. Let's go to lessons learned and let's see if we put our target in the right spot. Let's see if we put our stop in the right spot, and see if our entry was good, right? So we could do all that stuff easier, at least in my mind, when I could see it graphically on the page like that. So Dow right now, at 10 o'clock, 23 seconds left. I expect something. Oops, what is that guy doing there? I have no idea. Things started popping up on my windows all the time. I got to figure out how to get rid of that. 10 o'clock candle could be a big deal here at 11 o'clock. Anything could happen, of course, but we've seen some velocity happen at 10 o'clock, which has been jarring. But nope, not right now. Here we go. Here we go. Again, the VWAP is holding. We're in the rectangle right now. We have a doji. The previous candle is a doji, right? The body of the candle is non-existent. The open and close price is the exact same. This is the first candle after the opening range has established itself. Let's keep that in mind. We're going to touch the VWAP again. Let's see if the volume weighted average price line could hold as an area of support or not. And for that reason alone, I'm not going to change anything. We're going to hang tight and just be patient. Whew. All right. Well, we did a lot of work today, folks. But we're not done yet. We have, let's take a look while we're waiting for this to do something. Let's go ahead and take a look. We already looked at the Fed funds, right? Things seem to be, the picture seems to be more and more in focus on the Fed funds tool. I'm just going to refresh on the side of my screen to see if anything's changed since we last took a peek at it instead of spend too much time on it. And nothing really has changed on it as well. So let's go over to the calendar of events. Let me find the calendar of events. We got it right here. Calendar of events, scrolling all the way down. This is the CME Group's calendar, right? By the way, the other reports, Isabel, I forgot to ask you to put in into the chat. If you could put those links into the chat. Remember, we had durable goods, and we had jobless claims, and we had GDP. So those are direct links to the reports. I think it doesn't take long to read them. They're summaries, right? You could click deeper and say, get into the math. But Isabel, if you could do that for me, I'd greatly appreciate it. And throw the GDP one in there again, just so they're all together. That'd be awesome. Thank you. Today, GDP is done. Jobless claims done. ECB announcements done. EIA nat gas up next. Kansas City Fed up after that. A whole bunch of routine treasury functions after that, and then Fed balance sheet as usual at 4:30. Tomorrow, big day. Remember, tomorrow we'll talk more about this at Bar's closing. Personal income and outlays. This is what we're looking at for that PCE number month over month. Let's see if it works. There we go. Personal consumption expenditures month over month. Here's the numbers. This could be kind of important. Maybe not. I don't know, but it could be, as we have this tug of war that goes on between earnings right now and the inflation picture. So that's kind of that. Dow's kind of slowing its roll. Let's take a look at a volume. E-mini S&P up 628,000. That's a good start. That's a really, really good start. It is 10 o'clock. And remember, we talked about, well, what do you do when the trade takes too long, right? What do you do when the trade takes too long? Your expectation was something was going to happen within 30 minutes or 45 minutes or 60 minutes. And then at that point, you can make decisions. Do I want to trail a stop? Do I want to tighten my target and all of that stuff? In this particular case, in reality, I would leave this trade alone for now. But there's an obvious place that you could trail, right? You could trail to that 61.8% number or right below the opening range is kind of one idea. Give it a little bit of a better risk reward profile, if you will. If you wanted to do that, I'm going to let it roll. I'm interested to see what happens here because we had such a strong start in the Dow, and the Dow and Russell are looking pretty good, and it's all okay. On the target, you have that R1 sitting right there, top of the value area. You have two areas of interest, right? So again, if you wanted to tighten that profit target to get down there, I wouldn't hold it against you at this point, right? I think that's a reasonable kind of thing. And again, remember, pigs get fat, hogs get slaughtered. So maybe it would be a reasonable thing to do. I'm going to leave this one alone and just see what else is going on the screen before we go to the daily charts. All right, so wow, dominant candle, but we're getting pushback here on crude. Yeah, I would be, again, my bias is this VWAP is held. My bias is definitely on the long side in crude oil right now. As we're driving toward that $90 handle, that 90 handle right now. So I'm going to keep that in mind as well. And then this might, the bottom of the opening range, this area right here. I don't have a fib line in it yet. Let me put a fib line in really quickly, just to make me feel better. This is like my comfort food. By the way, I have to admit, in addition to the martini, I had a full-size Reese's peanut butter cup bar. Now that's generally not good, but I did it. I know it's bad. Gold didn't get filled. At this point in time. We were directionally right, but we didn't get filled. So I'm going to cancel the orders. And then lesson learned may have been if we would have looked at this chart 10 minutes earlier, we would have been in the game, right? And that's part of the thing. When you're looking for trade opportunities, you really want to do it. You want to focus on 1, 2, 3 markets. Here we're focusing on everything. So that kind of makes it a little harder, but we didn't get it. So we're going to get filled here. Something happened in the YM. All right, YM, we hit our target. Yay. All right, so that was a cancel the stop. Don't forget that, folks. Cancel the stop. And we'll see if this thing continues to make new highs or not. I don't know. We're still trading in the opening range. But from a lessons learned point of view, we were patient. We waited for that VWAP. We waited for the rectangle. 50% was right in alignment with all of that. We had 3 really good things in front of us. Our stop was in the right spot, and it worked out. Doesn't always, but it did that particular time. Daily charts. We got some time for daily charts, don't we? Someone tell me we do. No one has to tell me we do. Although I did lose a piece of vital information. Oh, you know why? My tab and my Google thing here got all mixed up. All right. Carlos, I didn't see this comment, Carlos, but I'm going to read it out loud now. Jim, to a large degree, our moods are moderated by our perceptions, and especially the perceptions regarding our passion for the industry. Love the passion you bring here. Thank you for that last part. And on the first part, Carlos, I agree 100%. I agree. Perception is everything. And I'm going to add a little bit to that as I got older. Simpler is often better. Easier is often better than harder. Simpler is better. Patience is something that you don't typically have as a young person, but that you could get as you go forward. But a young person can learn that discipline for sure. But you're right, man. I mean, mood is everything, right? And it kind of, not only that, mood kind of positive mood provides confidence. You don't even know it, right? You're more confident, right? You're more confident that you could be successful. You're more confident you could do something. So anyway, thanks for that little sidetrack, Carlos. I'm with you on that. Bonds again, kind of let's look at the daily chart here in Treasury bonds. This yield is going to have to change eventually, but we have, I don't know what kind of doji looking formation this is, a hammer, or it's not a shooting star, I don't think. I know Jason from Mission Control is an expert on dojis, but we're right at the top of the candle. Buyers came in and we're holding there. We're kind of price happiness right now in Treasury bonds at 21, at 28. I'm again, this is my target, that 23.6% retracement on bonds, give or take. It's not going to be perfect. But 124-ish handle is a target for me. And that's pretty far away from a dollar point of view, not far away from a chart point of view. All right, let's kind of backtrack. We'll do this backwards. We're going to go to the currency pair right now. Now the euro, we have a wick here, folks. We have a wick on this candle. Right, and it's not 50% of the size of the body, but it's close. So I'm gonna kind of consider where this closes at the end of the day. I don't expect us to make new highs today in the Euro FX, but we might not make new low. We might not get to parity either. We might not get to that 50% retracement either. And I want to measure the size of the body versus the size of the tail. I'm going to call it a tail, the shadow at the bottom, the candle at the bottom, the wick at the bottom. And decide, hey, is this a turnaround type of candle, or was it just a reaction to the new ECB action, which was released this morning, or not? So that's kind of the that's where my eye is going to be on that for sure. British pound, I mean, we have a lot of exuberance here. Everyone loves Sunak. We saw him speaking at Parliament, exciting fella. Maybe we'll get some stability over there. We had Boris for a while, but then we had a little bit of a mix-up, and now we're rolling. So in any event, This retracement is probably not going to be any good anymore. I just went high to low. You could do the opposite. You can go low to high. But let's see where we close today. Let's see where we close today. Similar thing. We have a big wick at the bottom. It's a small baby candle, but a big wick at the bottom today so far. And a small body at the top. Griffin, I was always told we'd become more patient and wiser in our old age. As far as I could tell, they lied. I don't know about the wiser part. I agree with you on the wiser part, but on the patience part, it's okay. Things take time. Yen, really quickly, same thing. Got that really picture perfect 23.6% retracement right here. Again, this is a critical area right here. I'd draw a rectangle right here if we had time, but that is, we'll see if we get continuation buying. I'm looking for a really nice short right now in the yen because I don't think that the Bank of Japan and the powers to be over there are going to pivot substantially anytime soon. All right, let's go all the way back to the E-mini S&P. Oops, that's the weekly. No, that's the daily volume profile. This is the weekly right here. You know, we're unchanged on the day. So far, back-to-back dojis. Let's really kind of pay attention. Yesterday, open and close price, same level. Big selling wick here, although we do have a higher high and a lower high from the previous candle. Today, similar, but a really, this is market happiness right now, or just not sure which direction to go. Right at 38.36, right here, right there. So again, that rectangle, we'll see if it becomes an area of support. It's not there yet. We got to get closes above it before it's going to become an area of support. Right now, it's still this long-term area of resistance. So I'm going to keep it there just to kind of see where we go. NASI selling off again, weakest stock index future so far. Earnings, my guess, has a little bit to do with it. By the way, on earnings, keep in mind, today, 4 o'clock, Amazon, 4 o'clock, Intel, 4:15, United States Steel, 4:30, Apple. And there could be some anticipation here, or at least maybe some front-running kind of concepts going on in the NASDAQ, looking as we get to that point of the day. Russell, boom, breaking out. Breaking out is the word of the day today. Let's see if we close above that 61.8% retracement. Really nice. We don't have a higher high yet, though. We have a lower high, inside bar altogether, if you think about it that way. Dow looking strong, again, at 61.8%. Let's see if we can close above it to continue this rally on the upside. Gold, we talked about in a lot of detail, bumping up against that area as well. And crude, again, rally hats on in crude, 61.8%. We're going to close above it. Let's just take a peek at gasoline. Gasoline's, well, midterm election folks aren't going to be happy with this, by the way, but double top on gasoline futures. It was a tight double top, right? From the 10th earlier this month till now. We're trying to break into this area, pretty keen area of resistance. We'll see. Again, this is going to have to do with, this is all about supply chain, pipeline, about refinery capacity. I don't even know what the refinery utilization number was yesterday. I should have looked that up. My bad. Anyway, nat gas is, still in the doldrums kind of. Again, this is in the US. We know Europe has a different problem. We know it's really hard to kind of liquefy the natural gas, get it on boats and get it across. And especially where we still have a whole bunch of bottlenecks in Portugal and Spain unloading some of the stuff in addition to other parts of Europe. So I'm not surprised this is kind of down. Really nice head and shoulders. Tom pointed out with the measured move, we hit it. Now we're kind of tracking back down toward it. I think we covered all the main ones we want to cover, folks, today. Really appreciate everybody being here. Paul, so wants to, are you able to show your daily volume profile screen? Yeah. I mean, if you're talking about, well, that's a different screen. This is just, this is the daily one, right? I'm not sure if this is what you're talking about or not, but this is like the heat map screen. And it gives me, it's a heat map. They call it heat map volume profile. So it kind of highlights in red where, more volume occurred, and then yellow is less volume. It's very dramatic, I think, but I like it. I mean, it kind of looks good. So in any event, this is just kind of showing you the evolution of these points of controls, the value areas, and look at the consolidation we have so far, right? Look at the last three sessions, 380, 38, 60 is pretty much defining the conversation at the bottom. and 38.70, I'm sorry, 38.36, I'm sorry, 38.36. And then 38.70 is defining it at the top, right? We're in the middle there. We're kind of range bound right now, which is actually pretty interesting also now that I look at it. Paul, if that's what you're talking about, that's what it is. If you want to look at my settings, that's a different thing. I'll show it to you on the 10-minute really quickly. Look at that Dow breaking new highs. Holy cats. Indicators, and then order flow volume profile. You got to have the order flow version of the software. Click on that. Order flow volume profile. And then again, make sure you have calculate on each tick. Define how high you want each histogram bar. I have it defined as 4. Usually it's good to have this histogram bar height kind of consistent with the tick value of the market you're looking at. Remember, crude's 10 cents, $10 increments. So you would do, a 5 or a 2, something that's divisible into it. Treasury bonds, are a little bit different. It's a 32 tick point. So you would do 16, 8, 4, 2. Here in the stock index futures, it's a quarter point. Well, exception of the, I shouldn't say that. The Dow actually, this is wrong. The Dow is different, right? I would change this to a 5. The Dow, there's no fractions, right? The Dow, there's no fractions that apply. The other stock index futures like the S&P and the NASDAQ and the micros associated with those two markets, those are in quarter points. So those I would put up 4. And then just scrolling back down here to the bottom, I do click show volume labels. So you see those volume labels in there, and then you hit OK and you're good. And then you'll see the volume profile. So if that was your question too, we covered that as well. All right, we are really up against time, folks. Turtle says, I'm waiting on a 12 noon Chicago Central time zone when my 4-hour chart changes candlesticks in the FX markets. All right, that sounds good. Looking at a 4-hour chart, I like it. Everyone's chart preference duration is different, and I love it. All right, having said all that, folks, most important message as usual, be safe out there, be good to each other, and thanks for coming.